To hark on David Dreeman's old red room, green room, what we're seeing today is the red room is getting torn apart. And in the red room, it's always very exciting and fun, and there's lots of people, and there's very few seats. And in the green room, there's tons of seats, and it's boring, and nobody wants to be there. That's where the money's being made today, and it's being lost in the red room in comparison. And it has everything to do with what Stephanie said earlier. Momentum, growth, tech, just getting crushed right now. It's quite a fun time to be a stock picker, to say the least.
So Cole, give us a name. What's one of the sort of top, more defensive value names that you think's worth buying after these recent sell-offs?
Where to start? So you guys talked about the home builders, okay? It's a perfect example, okay? Old economy, boring, frustrated in the last 12 months, has a very bright future, as Stephanie said, with all these millennials. There's good money to be made there. The things that were going to be hurt by the phenomena going on in the red room, the changeover in media, Discovery Communications, non-scripted content, Chip and Joanna Gaines doing all they want on their own channel is quite a great way to make money. Me sitting here is free content for you guys. That's the kind of television that's very profitable. That's not what the red room players like Amazon or Netflix are playing in. They want to get very expensive actors and actresses and create great content. The only problem is it's not profitable. That's the dispersion going on in the marketplace right now. I don't know what the correlation numbers are, but like I said, there are stark things going on between what was exciting and what was very boring and old to people.
Stephanie, what's exciting to you right now? What have you been buying?
Those companies that had good earnings where their stocks are down from when they reported, and that's kind of been the classic way that I have invested. So, example, Intel. A good quarter, and I look at the contrast between NVIDIA and how that's getting just hammered every single day, and Intel, where nobody liked it, everyone thought it was left for dead. They actually had a blowout quarter, they raised guidance, they have a great balance sheet, and I actually think that when they get a new CEO, that's going to take the stock the next leg higher. It trades at 12 times forward estimates, and it's down about 15% from its highs, so I still think there's a bargain there.
Stephanie,
that's just one.
Clearly, oil prices have come off sharply. Is there anything in that sector that you like?
Yeah, I really like Anadarko. It's had a kind of I mean, all of energy has been a really tough sector this year. But these guys have really done a very good job, this management team, in terms of using their cash flow in the right way. They're actually buying back their stock. They're not just plowing it all into CapEx. They do have good assets. So I like the kind of total return story that you're getting. They believe in their valuation as they are buying their shares. But I don't know as many E&P companies that are buying back their stock as rapidly as Anadarko is. And again, this stock is down so substantially from its high that I've been adding to that one too.
Mike, it's important to see oil prices stabilize for the broader market. I mean, of course, we can always focus on the fundamentals. It's a good thing for the economy and the consumer, etc. But at the moment, it's been a momentum factor that has hurt broader risk assets.
It has. Momentum factor perhaps related to the rising dollar, but also industrial production in the U.S. is pretty well tied to investment in the energy sector. So I do think that there's a bigger kind of benefit to stable to higher oil prices that we see that matter more for industrial corporate profits than we get a benefit on the consumer side from lower prices.